Hi and welcome to the Market Alert for Thursday, the 27th of October 2022. So tech stocks wreck, but bonds, bullion and Bitcoin bid as rate hikes. Odd slides. So this is the rumour at the moment that they're going to be pivoting sooner than we thought. We'll just have to wait and see. But the subhead is interesting. Volcker did what was necessary and beat inflation. Burns didn't and failed. How does Powell want to be remembered? Well, we'll have to wait and see. Only history will be able to judge that one. But he'll probably be wishing he'd have increased rates faster or sooner. US stocks were mixed, in which the SPX and NDX were lower on Wednesday, with tech sector leading the losses. Well, I didn't see that in the charts. I have to say, maybe the Nasdaq, but it was vertical. Again, big tech drags indices lower while dollar slides and loony lags on dovish Bank of Canada news. Bank of Canada hiked rates by 0.5% during yesterday. Today's economic news, what have we got? The rain refinancing, which is basically interest rates for Europe, 1.25 to 2.0 at lunchtime, 1:15. Monetary policy statement, that must be from Lagarde, and advanced GDP quarter on quarter for the US at 1:30, showing an increase there, which is, if we get that increase, then we go vertical again. Another day on the stocks, 2.3. That's a big jump from minus 0.6. But again, we'll have to wait. But then, take into account the fact that midterm elections in November, they're doing everything they can to rig the game at the moment for Biden. ECB press conference at 1:45 as well there. So Lagarde speaking. So it should add a bit more volatility to the DAX. Gold silver ratio still around 85. Speaking of the metals markets, some news. Physical silver demand source, bullion dealers offer huge buyback premiums. This is the first time I've ever seen this in nearly 35 years of trading, as tight as I've ever seen it. So an interesting one there. I know that the bullion vaults have been seeing a massive drain, particularly COMEX and the LBMA, of physical silver deliveries. So that might be what's lending support, along with the slide in the dollar, of course. Right, let's have a look at the market's kickoff with the Dow, see what it did during yesterday, how much higher it's moved, and whether it will continue to move higher. So, kicking off with the Dow, we've traded up to the 89% retracement from this big swing here, from down to back up. So, an interesting area. We're up again on the overnight. We were up yesterday, and the market continues without any really much selling. We saw a bit of a pullback there, but we soon picked it back up. Nearly an 89% retracement there back to the close as well, late on in the session. But nonetheless, we're heading back towards the highs today in the futures. This is the selling of the actual physical stocks. This is futures driven, as this is futures driven on the overnight. They can move the markets up because no one's selling the actual cash equivalent. So, no surprise there. Just watch the high. We'd like to take the high out, as we saw yesterday. Once you've taken the high out, the market then tends to find this as support. Even though we sailed through 100 points here, we can see the demand. We're oversold. And then we've also got divergence, and the market then moving back to the upside there. So from a bigger perspective here, let's just scrunch this down a bit. So we've got the 200 MA, which is going to be in the way, along with the selling that took place there. This will obviously finish at some point, but at the moment the market continues to move higher. Let's have a look, see how many points the Dow has actually moved up now in the last few weeks. Green all the way there. So we're up 3,546 from the low to yesterday's high. So massive move there, 3,500 points, so 10% increase, or more than 10% increase in the Dow. Let's just have a look at yesterday afternoon while we're at it, when the market opened and traded up to the high. There we got 458, and then we saw obviously the decline as well in price. So let's just have a look at that. And down, we came back 395. So big swing there, but back up on the overnight. In fact, let's just have a look, see from the close of last night to where we're currently trading. We're already up just 250 points. Like I say, the highs on, is it already in the crosshairs, isn't it? It's on the radar, as they say. Let's have a look at the German DAX. And in the German DAX, we're at the 78.89. We've also got a bit of supply coming into the market. We've got the ECB refinancing and quite a bit on that front today, Europe, so that should put a bit of pressure on this market, but who knows, it could be good news, particularly if we get that GDP number from the US at 130, and it's above zero. That's going to boost the markets to the upside. So we've got the 89 in the crosshairs and also the target to the left. We're way above the 13,000 at the moment as well. We're a couple of hundred points higher than that during yesterday. 13,571 is the target on the upside now for this market. 30-minute charts. Well, we kicked off to the upside, didn't we, once again yesterday? Let's have a look. We're already oversold, crossover, sideways, and then the market broke out. Came back 89% to the 50 EMA where it became oversold, and then moved back to the upside as well. The move yesterday, low to high for the DAX, including the future session, was 197, not as big as it appears to be. We've seen bigger moves than this. We look at the daily, but yesterday that was a 200-point move, more or less. The recent move total, while we're at it, is 1,223, so just over 200 points yesterday on the upside. Starting to look a bit tired, and like I say, when it turns, it will turn quite fast, but at the moment you can see we've got the rising lows and the highs taking out the previous day high, so it's important to keep an eye on the high, and we're already heading for it. We're going to go through that, aren't we, the futures market this morning. How long it stays above there remains to be seen. Just going back to that daily chart, so we might, 13,377 is the 89. Let me just have a look and see where that is in the intraday charts. So it's above the R1 and it's about the R2 then, isn't it? So that's the 89. That's a ballpark. It's a bit higher. So again, we're making our way up there at the moment. The 50 EMA has paid dividends. There is a pullback level as well. In the 5-minute chart for yesterday, very interesting because we had a move up off the futures at 7 a.m. Then we traded sideways with the momentum shifting to the upside. We had a bit of a pullback there, and then off we went a couple of 100 points that is. And then we drifted lower. There's an interesting pattern here because we've seen this for the last couple of days. And then as soon as the US comes on stream, with the cash market at 230, the market then pumps to the upside. Overnight, in the 5-minute chart, you can see that they're desperate to keep this market moving to the upside. It's still half term. May see some movement next week on the downside, but at the moment, there's just no sign of it. As you'll see there, the market heading towards yesterday's high already for the German DAX. Trades this week, very small for me because I'm busy with other things, unfortunately, so I've not been able to devote the time. 117, 3.67. It's not a problem because on the month, near the end of October, we're at just under 3,000 there, with a profit factor of 7.4 and still 72 to 28 there for the win-loss ratio. So just not at the desk as I would like to be this week, unfortunately, due to other things that I've spoken of before. But not to worry, the volatility will return next week, no doubt, and as soon as Sunak's honeymoon is over. And also talking of, the lack of geopolitical news, we had some yesterday about Putin testing nuclear weapons, and the market still went up. So, work it out for yourselves. It's just nonsense at the moment. In the S&P, also heading towards 89% retracement there. Bit of supply for yesterday. Above the 50 bar moving average, though. Got this resistance to the left. Overbought. So due for a bit of correction, as all these are. But again, at the moment, what is there to bring it down with a rumour of no increase or November from the Fed? We know it's all BS and they're likely to raise 0.75%. But there's your same pattern as the Dow. and then back above the DP, and there's your high. That's what it's gunning for. The lows are quite close as well for the S&P as it is for the Dow as well. So sort of, as it says, the daily pivot is the difference between the two, the average, so you can see why there you've got the low and the high above and below. In the FTSE, moving up also to the 89% retracement there, above the 5-bar moving average, which is really important. Momentum still to the upside. We've got this resistance here to the left as well, which is also going to be the 50 EMA. And having moved up and become overbought, the market is likely to show some sort of reaction at this level. The 30-minute chart shows the FTSE moving up with the Dow. Didn't move anywhere in the morning, discounted the DAX moving higher and moved down to the 200 MA, but the momentum was moving to the upside, as can be seen there, with the divergence and the demand, and then it was wallop straight up following the Dow there. Again, not too far away from yesterday's high. But we've got a cluster of economic news later on this morning. And in the currencies, GBP, JPY down on the overnight, quite a bit of a shakeout, which we'll see in a moment. It's got the supply there, been sideways and needs a bit of a shakeout, as do the stock markets. There's your shakeout coming in. Market at the 200 MA at the moment and through yesterday's low, so they'll be determined to try and bring it back through the low and head towards the high if at all possible. Meanwhile, in the pound, Sunak's honeymoon is still going well and quite strong, as you can see there with the pound up. Again, similar picture to all the rest. It's at 89%. Let me just draw that in. If it's not, it's just through it. Yeah. And you can see a bit of supply divergence and the momentum dropping off slightly there. So again, depends on the US dollar. The 30-minute of the pound, Sunak's first day in office, you'd expect the pound to move higher. It's exactly what it's done, and we're close to yesterday's high, which the market's likely to go through. And starting off with the dollar, this taking out the 78, 89 and the 50 EMA yesterday, down on the overnight as well, heading to this support area. Just get rid of these fibs and let's just draw in some new ones from this low to this high. And there's your area of where the market's likely to find some support. In the 30-minute chart of the dollar, you can see yesterday the decline as the pound moved higher with Sunak first day in office. We're already through yesterday's low. See if the market will be brought back here. In the gold markets, sideways to higher. No need to draw anything on that one. And there's your 30-minute chart where you can see the move yesterday. Then it became very choppy, as it has overnight. The high is where the market needs to get through, that 1674. And finally, in the silver market, which is showing huge physical demand at the moment, continuing to move to the upside. But don't be surprised if they crater the price, because that's what they've been doing for the last 30 years. And we're still below $20 when the high was $50 in 1979 and 2011. So way below. Dirt cheap considering the price of everything else. And at the moment I'm on another bit of a build project, and I cannot believe the price of building materials compared to this time last year. It is absolutely extortionate, and yet it continues with people having extensions done and everything else. And I was talking to the cashier in Wix, and he was saying that the builders that are coming in have stopped quoting and said we'll do it nearer the time when we can do it, because he cited one particular example where they said it was 38,000, but on requote it was 50,000, and they think that the customer thinks that the builders are ripping them off. Well, we'll leave that bit aside. There are some unscrupulous ones out there, but the point that he made, I mean, that is the sort of increase that we're seeing, and 100% increase in the price of wood. But there's no inflation now because the markets are going up. I'm not going to get any more rate cuts, increases according to the rumour mill at the moment. But we know it's all BS. And that's not going to be the case. The sentiment's going to switch as quickly as it's moved to the upside. It will switch to the downside, of course, when everybody returns from the half-term holes next week, and reality then once more kicks in. We don't want indigestion for these traders while they're away and the market crashing. So we'll wait till they return next week. Okay, that's it for this one. Let's see what the market does today, but a bit of more news to give a bit more potential for the downside anyway with the ECB and the GDP numbers. But if they come out as forecast, in particular this GDP number, I mean, that's staggering, isn't it, when you look at that, wherever we are, advanced GDP. Yeah, there it is. Minus 0.6 to 2.3, massive swing to the upside, that is. So I'll be watching that one at lunchtime to see what happens, because if that happens and it comes anywhere near that or greater, then the stock market's going to go vertical on that news, unless they discount it, of course, but I very much doubt it. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.